Rabobank has issued a fresh warning about the stability of the OPEC Plus alliance, pointing to growing tensions that could lead to significant fragmentation in the global oil market. The report identifies two key factors: the potential exit of the United Arab Emirates from the group and the renewed legislative threat posed by the NOPEC Act in the U.S. These developments could severely undermine the cartel's ability to coordinate supply and manage prices. The UAE has long argued that its production quota is based on outdated data and unfairly limits its output. Recent estimates suggest the country could produce over 4.8 million barrels per day, which creates a clear mismatch between its ambitions and the constraints imposed by OPEC Plus rules. A formal exit would not only remove a major producer from the quota system, but could also trigger a competitive race for market share among other members, potentially unraveling the supply management framework. Adding to the pressure is the NOPEC Act. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A U.S. legislative proposal that has been reintroduced in Congress. This bill would empower the U.S. Attorney General to sue OPEC Plus member states for price fixing under U.S. antitrust law. While similar bills have failed to pass in the past, the current economic climate, marked by high inflation and rising energy costs, could make the NOPEC Act more politically viable. If enacted, the law could force OPEC Plus members to choose between cooperation or facing legal consequences in the U.S. The stakes are high. A fragmented OPEC Plus could lead to volatile oil prices and unpredictable supply dynamics, which would ripple through global energy markets. The UAE's exit, if it occurs, would be a major shift in the group's composition and could signal a broader trend of dissatisfaction with the current quota system. Meanwhile, the NOPEC Act's potential passage would introduce a new layer of legal risk for oil-producing nations, altering how they manage production and pricing strategies. Rabobank's analysis draws on historical patterns and current policy trends to suggest that the OPEC Plus alliance is facing one of its most serious challenges in years. The UAE's dissatisfaction is not new, but the convergence of production ambitions and geopolitical pressures is intensifying the situation. At the same time, the U.S. political landscape is shifting, with bipartisan support for the NOPEC Act indicating a growing appetite for legal action against oil cartels. The next key signal to watch is whether the UAE formally announces its intention to. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Leave OPEC Plus. Such a move would be a clear indicator of the group's weakening cohesion and could prompt other members to reconsider their participation. Additionally, the progress of the NOPEC Act in Congress will be crucial. If it passes, it could redefine how OPEC Plus operates and force member states to adapt their strategies to avoid legal repercussions in the U.S. Until then, the oil market remains under pressure, with uncertainty looming over one of the world's most influential energy alliances.